Okay, well, let's get this thing going. So better, Natasha says. All right. Yeah, so today we're going to talk about June, but we're also going to be putting a cap on the end of the first half of the year. Today, as I already told you, I'm hosting the market update by myself here in our culture space, and we're giving a different look since Dave is away. Today's update doesn't have any catchy phrases or anything like that. It's simply an update. It's a mid-year report. If you're like me and like you guys, you're probably waiting for, hey, look, I can see myself. Very cool. You're probably waiting for the market to get out of hibernation a little bit. You've been trying to ask yourself, when is it going to come around? And today I'm going to hopefully enlighten you on to whether it has or it has not. So the short information is it has not. It has not come out of hibernation, and I'm going to go into some more details about that. I always like to start with a couple key facts that I can talk to you about so that it kind of paints the context of what we're talking about, and then we'll dive a little bit deeper. So fact number one is this: the inventory is the biggest story of the year to date. I'm going to pull up a graph here. I'm going to pull up a graph. Give me a quick second, and I'll show you what I mean by this. Inventory. There it is. And I'll go bigger so that you can see it. Hold on. When I talk about the first concern, and where'd we go? Sorry, guys. There we go. Inventory. I'm going to get bigger for you. I promise. If I actually am allowed to. All right. Well, if I can't get this bigger for you, I apologize. It's going to just add a bit of context to the space. If you look on the far right side of this graph, you'll see that inventory is the highest thing in the recent history. So as I say, inventory is the story right now. You see that when you relate this to almost the last 10 years, we're seeing that we have a lot more than we typically do. So that is kind of what started us off. Now, if I go to number two key fact, it's going to be about sales. So if I'm going to whip you over to another graph, and this is the sales graph. Here we go here. Sales is a different story. We've talked about sales being quite slow for the year to date. But now, if we look at what June did, this graph over the last 15 years is showing that we're actually kind of on pace. Right? Like this year, last year, the year before, we're all within a very small window that June looked fairly much okay in relation to the rest of the years. There are some peaks on this graph and there are some lows, but I think when I counted this, we're like 9 of the last 15 years, we've had a very similar June to other Junes. Just the difference is that inventory is much, much higher. So it doesn't feel like a typical June because when we're talking to our sellers and they're frustrated, they're not getting as many showings because there's just more properties to go see, which means even though we're selling as much, each seller on the market is getting less people through the door than they normally would. So I'm going to change away from graphs for a minute and back to my screen and go into some more of the report for you. Yeah, the third thing is that as a city, prices amongst all of that other stuff I just mentioned are still flat. They are flat. The high inventory and the lackluster kind of sales in comparison to say 2014, June brought, it just hasn't changed enough of the dynamic. They're negligible. So we're just seeing that the prices are holding still. Somehow they're holding, we're resilient. But there are a few caveats to that, which I'll talk about a little bit later. Now, if we break down the property types, this is also very important because if you're a seller here in Calgary or a buyer, you're not looking at the whole city as a whole and all price points, all ranges. You're looking at, hey, I'm buying a detached home, an attached home, or an apartment. So I'm going to quickly gloss over the three things for each type. So for the detached market, inventory is up year to date, 40%. Right, so that's a big number, 40% year over year compared to last year. Sales are down by 19%. Now, that's as year to date. June looked better, like I said, only a 12% difference in June than we had last year in June. So that's as close as we've been all year long to last year's figures. It's been a lot worse, a lot more often than this. So this is as tight to what we expected last year, or what we had last year. So maybe feel a little bit of optimism from that. Months of supply is up 72% on the detached market over last year, which leads to an increase in days on market. So the days on market isn't direct, it's not all, it's months of supply doesn't directly correlate to days on market, but it does factor into that. So the days on market for detached homes is up 20% over last year. So not that 72 scary number, but it is still higher. And like I said before, prices are maintaining that flat level. So we're winning there, and we're not stressing. Now, the apartment segment, inventory is only up 5% year to date. So we're halfway through the year, and it's only up 5%. But remember, it started higher than what we had in the other markets. Sales are down 9%. We just said detaches are down 19. Sales in the apartment segment are actually only down 9. Months of supply. It was interesting. The June months of supply was a little bit better this year than it was last year for condos. So something's happening well there, and it's because of the inventory story is not as negative as the detached market, and we're actually allowing it to kind of shine through a little bit and give us a little bit of light. So, but it's still at year to date 15% higher than it was last year. Just June had a pretty substantial June for the condo market, and did okay. Now, the difference about the apartment market versus the detached is it continues to have a price decline. Again, hey Vic, again, not -3% we are year over year in the condo market. So it is declining. Attached market. Inventory in the attached market is up 31%. Sales are down 16%. So it's a very similar story to the detached product, but just quite not as severe. Months of supply, again, bumped up in that market over last year by 56%. So days on market, again, have crept up somewhere in that range, like the detached, closer to 18 to 20% more than last year. But again, prices are staying flat there. There's no real stress there yet. So that's interesting. So what does this mean for you? Right? What do we tell our buyers? If you are a buyer, what do you need to know about? It's simple. It's just a full-on buyer's market. It's get out there and buy, right? That's the advice. Get out there and buy. We have the most selection that we've had in a long time. I showed you that inventory graph. So we're sitting there with the most things to look at. So go after it if you're in the market. And with that, we've had frustrated sellers for most of this year. So I'm saying we've got the most things to look at, and we've got sellers that are the most motivated that they've been in quite a long amount of time. We've just hit the peak selling month, June. It's only going to get slower from here. So if you're a buyer, this is a great opportunity to take advantage of both supply and frustration from the seller side. Waiting for slower months, which a lot of investors like to talk about, those December, those Januaries, those Novembers to get that deal. Sure, you might be able to sneak a better price, possibly, but you're going to look at a lot less product than if you were a buyer today. Get out there. The whole market is waiting for you. So maximize on that. And here's another thing that when buyers consider waiting for that little bit of a price break later in the year, is that oftentimes the seller's mindset changes. Sellers right now want to sell. They're feeling like it's the summer. This is the time to transition, to make my move, whatever that might be. But as the year goes on, they might not want to be as motivated to move in December now. So they might not give you that price adjustment, and they might actually take it off the market and wait till spring, or wait to make that price drop to when the market's busier. So that's something that buyers a lot of times don't think about when they're out there. Now, the other thing about that is mortgage rates are forecasted to continue to climb. So it might be a little bit more expensive to get that home, or you might not qualify for just as much. So that's something to educate our clients on, as well as if you're a buyer listening, that's very important to note. Now, on the seller's side of things, oh, my sellers. We love you, and we feel for you. Us as agents, we're there. We're understanding the frustrations that you're feeling. But there's still a lot of hope. I pulled a bit of data to discuss what's happened in the last 30 days, right? What can I tell you about the last 30 days in the market for all the sales that happened in Calgary and area, and what happened to it? So here I'll go. We had 2,544 sales among the Calgary Real Estate Board region in the last 30 days. 1,042 of these sold in 30 days or less. So that's 41% of the homes that sold in this last 30 days sold in 30 days or less. So that's good news for you as a seller, right? You still can sell, and a lot of you, 41% of you in the last month, have sold in your first 30 days on market. That's something to be, optimistic about. Now I went a little bit further. On top of that, 1,388 of the 2,544. So that's what number? That's 55% of the homes sold within 3% of the list price, right? So still within 3% of list price. I've painted a high inventory story, a very lackluster sales story, but still 55% of you, almost over half of you, are still selling within 3% of your hopeful list price. So that's pretty good, right? You're selling fast and selling for pretty close to what you want. One step further, within 2% of the list price, 32% of all homes sold within 2% of list price. So that's, again, optimistic, right? And then if you wanted to go into 1% or better of those homes, so 14% of all the homes that sold in the last 30 days still sold for 99% or above of list price. So again, that's a pretty good chunk of you, right? So don't do yourself a favor. Don't be greedy. Hit the market hard with a great price, and don't get overly aspirational, as I like to say. And you're going to be able to make your life transition happen. That's the cool thing. Things are happening. Now, for the greater Calgarian, for the people that we talk to, the people that are listening that aren't in the buy and sell cycle at all, and they just want to know, what does this mean, and does it matter at all? Condo owners, prices are still declining. You just need to understand that if you're holding on to a property for the next little while, and I've been saying this for 18 months, that's the reality. You're going to see month over month declines in your pricing. So now there are pockets of areas, if you're a condo owner, that are doing better than that. So just again, if equities of interest to you for the next few years, and you want to understand what's going on, again, talk to your real estate professional, find out if you're really affected or not. Actually, Vic, you and I talked, you had a condo owner that bought a year ago, and they might even be able to get more today. So again, it's really interesting to see the differences that are out there. But for everybody else who's not a condo owner and just wondering what's going on, no stress. It's slow, yes. Inventory's high, yes. But really, we're all stable, right? Your home's equity is maintaining itself for the most part. And some areas are seeing price increases, and substantial ones. There's some parts of data that I was looking at that are seeing nearly 8% year over year increases for a community or property type. So you might be in that market. So yeah, there are some good things to note. Now, if I were to talk about a couple of things, I look at hottest market segments, right? I try to look into detached, apartment, semis, and rows, and I try to see, is there, what are some things that stand out that I can not bore you with in a market update like this? And the one thing that I wanted to mention is in both the apartment segment and the attached segment, so 2/3 of the overall market, what we're seeing is the sale price to new listings, right? So not the sale price. The amount of sales to new listings in these districts actually went up by a substantial amount in all of the apartments as a whole and the attached markets. So where we were last month selling something like 36% of all the things that went to market sold. In those, now we're up to like 44%. So they bumped up about 8%. So that's a really good news story that you're getting more success if you're the ones attempting to come to market. The other thing I wanted to point out on about kind of these districts and what to note is, yeah, there's a couple types and property types that are having incredible year-over-year appreciation. And if you want to know what those are, again, hit us up, put a comment. My agents are going to hear about this as an insider's bit of information, but I don't want to bore you guys all to death. But there are some that are doing well. The one thing that stood out, though, is the apartment segment caught me off guard. And year over year, actually the month over month numbers for appreciation went up. So month over month, the condo market actually saw a trend upwards. And I was like, whoa, where'd this come from? And it's nice to see that there's obviously enough interest happening to counteract a bit of the negativity that's happening there. So very, very cool. Yeah, what else? Oh, hottest communities. There's not a ton that are scorching hot, but there's some that are doing much better than the rest. And I'll start with the major markets. So the communities that are having really strong sell-through, having no problem selling through the properties that have come to market and are continuing to sell through. Mahogany, as one of the big markets, is doing incredibly well, almost 1-to-1. For every home that comes to market, it's sold last month. Legacy as well. It's a pretty hot little new community with a lot of great stuff happening and development around. And then Mackenzie Lake. So these are all kind of the larger communities that are almost selling 1-to-1. There are some smaller communities that are, again, extremely hot and doing well, and some of them are even selling 2-to-1. Rideau Park, North Haven, Queensland, Southwood, Forest Heights, and even El Boya. So those would be the ones that are doing much better than average. All of those are doing better than 1-to-1. So they're all selling quite well. So if you're a seller or a buyer, you need to be mindful of the activity that's happening in those communities. All right, what else can I show you or tell you? I'm going to pull up a couple graphs. I'm going to flip back over, and I think there's a few things that I didn't talk about. So give me a second, and I'm going to change the display on you. All right, so I did text you about the sales equation. Oh yeah, this is one. So I'm going to make this a little bigger. In the detached market, there is one market that is trending upwards, and that's the West. So West is the only district showing upward pricing trend in the detached marketplace. And you're seeing all the way from January, this red line, perfectly set up, is where prices and the year-over-year benchmark price is going. So we're seeing the West, the only district, as it kind of tends to be the one leading the charge. It's very sought after all of the time. So that's one thing I wanted to comment on before I let you go. I talked about sales. Oh, sorry, I lied. There's two. The Southeast. So that's where Mahogany, Legacy, and the third one I mentioned is selling. So it's also having an upward trend. It had a bit of a blip in June, but I would say it's still having a trend upwards. So those are two districts that are sneakily moving upwards year over year that you should need to know. This graph might be hard to see. I'm going to try to make it bigger. There we go. This is an interesting one. I like to talk about what does the market feel like, and I talked a little bit about it. It's finally, our June was very close to last year's June, but this year, numbers-wise, this June felt like last March. So March had a little bit of an uptick, right? It had a bigger than normal spring, which means it felt kind of like a summer month. And we're seeing that its sales value was very much the same as far as overall sales, if you can remember back to that. But the big difference here, and I wrote that here, is we have 75% more inventory than we did when we sold that many homes last March. So it's a good thing. but we're going to feel slower. Like I said before, we're just going to feel, our sellers aren't going to feel that impact. Like in March of last year, we felt like, wow, there's showings happening. And it was like interesting. Now it's, wow, I don't even notice because there's that much inventory on the market. And where I would get 3 showings before per week, I'm getting 1. So it's changed a lot. The one good thing though, this second box, and again, you probably won't be able to read these numbers, but what I outline here is that the May to June bump that we just had, so sales in June versus sales in May, we had a better bump than we saw May last year to June last year. So this late rush, this coming out of hibernation, it's not like we're getting a rush, but we are seeing that there was a better uptick, which is probably meaning we're, July might feel a little better than a typical July, or at least that's what we're hoping. So yeah, that's an interesting piece to note. Let me pull that back and see if there's anything else I wanted to talk about. Oh yeah. Whoa. Hold on a second, sorry. Gosh, where are you going? Yeah, you won't be able to zoom in for some reason, but there's a lot of graphs, a lot of bars on this thing. What this is telling you is this is year-over-year price adjustments for all 36 segments of the market. So when I say 36, we've got detached and there's 9 districts. We've got apartment, there's 9. Semi-detached, there's 9. So out of all 36 kind of variables happening amongst all the different property types and areas of the city, 9 bars are showing, so 9 districts of the 36 are showing some positive year-over-year appreciation. The other 75% are seeing year-over-year declines. So again, it changes, and you can see this bar to that bar is a massive difference. So again, be very mindful as you're exploring your house value, Mr. Seller, or as a buyer that you're trying to explore where I want to buy. It's going to change a lot. And for us, obviously educating our our clients, we know that we're going to dig into this. Is there anything else? Oh yeah, okay. I want to be able to open this one up bigger if I can. Darn it. Because I like this one. It's kind of a sneaky little thing that I'm watching. You're not going to be able to see this. I'm looking on Rory's screen. Yeah, it's very tiny. Sorry. So what I found here I'm a data guy, and I'm looking for any kind of trends, early trends, anything to watch for. And what I saw here is that from May to June, this is a graph of all sales for detached, inventory and sales. So the blue is the inventory and the green is the sales. And there's this trend line for price. Out of kind of nowhere, where we've seen this positivity happen as a whole for the detached market, we've seen a price drop in benchmark price from May to June, even though we've had more sales. So typically we don't start to see that happening until July to August. So we're 1 month ahead. We've been a little bit slow this year. My concern is that now it might be starting to catch up to us a little bit, and there might be some true downward pressure on the detached market a little earlier than we normally see it. If that is the case, we would see a more negative decline on the detached market than this suggestion that it might stay stable. So it's interesting. It's a month ahead, and we were about a month behind. So that's not good, right? So we'll watch that, and we'll see if this continues or if it just was a bit of a blip or not. So, all right, I'm going to flip back over to my other display, and we'll finish this market update off. Where'd my cursor go? Yeah, so that kind of wraps it up. So if I'm wrapping up the update, this is what I want to tell you. 3 things. There's obviously way too much to say in these little short sessions. So again, if you want to know more about the market, make a comment. If you guys were going to talk about this in person, let me know. Secondly, massive variety among districts, price ranges, property types. So make sure that you're using applicable information. And then the third one is we've been doing this a long time, right? Both you guys have been listening to me, and then the consumers out there that are listening to what we do. If there's something that we're not covering that you'd like us to cover, that you would like to hear about, again, please let me know so we can dive into this a little bit more. But again, it's Friday, Stampede started. I'm going to let you guys get back to Yahooing, and so will I. So thanks for spending time with us during this monthly report. Next month, we were trying something even newer and funner, so watch for that, which means you'll be able to be notified when we go live via text. So watch for this. We're going to be sending that out so you have an opportunity to not miss it, because it's oftentimes we're not going live at the times we said we would. Nonetheless, have a great Stampede, everybody, and we will talk to you very soon.